Welcome to Speidel's California Minute. I'm your host, Catherine Zidane, and this week we're talking about some new and existing tax benefits for energy efficiency and other conservation measures. We'll be covering all of this year's newly enacted tax benefits at our federal and California tax update, and you can sign up for either the live seminar or the webinar at caltax.com. The recently passed Inflation Reduction Act provides for energy efficiency tax rebates and federal credits like home energy efficiency rebates, energy-related tax benefits for businesses, and a clean fuel vehicle credit. But California also offers incentives for energy efficiency and environmental conservation. One thing to keep in mind is that generally, rebates and discounts that represent purchase price reductions are not included in gross income for either federal or California purposes. Rebates and discounts that are considered purchase price reductions are ones that are offered directly or indirectly from the sellers of goods and services. But if the rebate is paid directly to the purchaser, the rebate is included in taxable income. AB 2142, recently signed by the governor, excludes from gross income for both California personal income and corporation franchise and income taxes any amount received from a turf replacement water conservation program in the form of a rebate, voucher, or other financial incentive that's issued by a public water system, local government, or state agency. The exclusion applies for taxable years beginning on or after January 1st, 2022 and before January 1st, 2027. Regarding other water conservation rebates, under existing law, gross income does not include any amount received as a rebate or voucher from a local water agency or supplier for the purchase or installation of water-efficient urinals and water closets, certain water and energy-efficient clothes washers, and plumbing devices that serve specified recycled water uses. This water conservation provision applies only to taxpayers taxed under the personal income tax law, not corporate taxpayers. California does not limit the amount of rebate or voucher that can be excluded and does not restrict the rebate to personal or residential uses. For corporate tax purposes, rebates from local water agencies or suppliers are treated as refunds or price adjustments rather than as income. SB 1340, which was also signed this year, extends the new construction property tax reassessment exclusion for active solar energy systems for 2 years through the 2025-2026 fiscal year. Also, California conforms to IRC Section 136, which provides an income exclusion for the value of any subsidy provided by a public utility to a customer for the purchase or installation of any energy conservation measure with respect to a dwelling. Gross income does not include amounts issued as a rebate or voucher by the California Energy Commission, the Public Utility Commission, or a local publicly owned electric utility for certain expenses for the purchase or installation of thermal or solar systems, wind energy devices, or fuel cell systems. And California offers an electric vehicle rebate of up to $7,000 for the purchase or lease of a new plug-in hybrid electric vehicle, battery electric vehicle, or a fuel cell electric vehicle. The rebates are issued through the California Clean Vehicle Rebate Project and are not state tax credits. They're issued in a transaction wholly separate from the purchase price of the vehicle. This means the rebates don't represent a reduction in the purchase price of the vehicle because they don't come from the seller of the vehicle, making them taxable income. We cover new legislation in Speidel's California Tax Letter, a monthly publication written by California tax pros for California tax pros. You can see what's included in a subscription at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Speidel's California Minute.